Let's move on now and let's talk about Reliance Capital, because there are a whole host of questions that we have for the management post the stake sale in the life insurance and the asset management business. Sam Ghosh, the Executive Director and Group CEO of Reliance Capital, joins us now to talk about that. Sam, hi, good morning. Happy New Year to you and your entire team at Reliance Capital, and thanks so much for joining us on the show. I would just like to
Good
start...
Good morning to you, and also Happy New Year.
Thank you, Sam. I would like to start by asking you about the stake sale. You've raised about 2,800 crores via the stake sale in the last 3 months. Can you just start by telling us a little bit about what the plan is with those funds that have been raised, say, over the next couple of years?
Yes, actually, we are in the process of getting final regulatory approvals for both the asset management stake sale, which is nearly 1,100 crores, and for the life insurance stake sale, nearly 2,200 crores. So in total, both of them will bring in about 3,300 crores, and that expected regulatory approvals in the next 1.5 months. So hopefully we should be able to close the transaction before 31st of March, and the funds will come in by that stage. Obviously, the funds will go towards partly to repay debt, partly to grow our housing finance business.
So what's the debt currently, and how much would you use from these 3,300 crores to repay the debt?
No, see, our overall debt obviously is dependent on how fast we grow our financial services businesses, because we are an NBFC. If we continue growing our commercial finance business as well as the housing finance business, obviously debt will continue to grow. More important is that can we bring down some of that debt. So as a debt to equity ratio, we want to keep it at about 1.8, which is very reasonable for a financial services company, actually one of the best in the financial service industry. And obviously part of that 3,300 crores will go towards repayment of some of the debt. But obviously as a company in a financial service industry, we should have some level of debt, because otherwise our lending business stops.
Will you be selling any more stakes, Sam, or are you mostly done with all the insurance stake sales?
No, see, we have brought in partners in our asset management business, in our life insurance business. Our plan is obviously next to bring in a partner in our general insurance business, where we own 100% of the company. There's substantial value in that business today. You may have seen some of the stake sales that are taking place. We are also in talks with a number of players now, and they're obviously showing interest in the Indian market, primarily because the regulatory, not only the 49% has happened, but also the guidelines around management control, etc., is also fairly clear now. So with that, we have started talks with some people. We expect that we will be able to sign some closing transaction documents by 30th of June latest, so that in the next financial year we can complete that transaction. So that is on our on our general insurance business. On our lending business, obviously our intention is to continue growing the lending business, both our commercial finance as well as the housing finance business. And housing finance, we expect it to grow at double-digit growth rates. On the broking side also, we are growing that broking business. Last year has been a very good year. This 2016-17 should be again a great year. And we want to bring it to a certain scale so that we can bring in a reasonable partner at that, in that business.
We'll come back to
our asset reconstruction business.
Yeah, that's what I was coming to. Actually, would you want to buy any more funds? I mean, you bought the Goldman Sachs AMC funds. Will you be adding to the amount of assets under management in your mutual fund business?
Yes. See, our intention is that, first of all, obviously in the asset management business, we want to remain in the top 3. We want to grow our international business, international funds, as well as grow our domestic funds. Now, on the international side, obviously, we've tied up with Samsung. We intend to tie up with other players in Europe, etc., so that we can bring in the flow to India becomes greater. On looking at the Indian market itself, obviously, we always are open to opportunities that are available, and we will look at those, evaluate those as and when necessary. But our intention is that obviously we'll continue growing all our businesses, besides our mutual asset management business, but also in our other businesses. And if there's opportunities available in any of them, we'd obviously be open to looking at those.
One concern, Sam, that the market has had is a lot of the investments you have in unrelated businesses, like your investment in Prime Focus and other media companies, in EIH, Gujarat Fluoro, etc. At what point will you look to hive any of it off? And if you do, then what are the amounts that you would plan to raise via this sale?
See, our clear intention, and our chairman has mentioned this in a number of our AGMs, is that we want to be a pure financial services player and exit all our non-core businesses, being all these investments which we had invested in the past. One area was the entertainment businesses, which we have obviously taken substantial measures in the last financial year. Reliance Media Works, we've divested our theatre business as well as our media services business. On the Reliance Broadcast Network, our radio business also, we'll be looking at opportune moment when we can bring in a partner in that business. And also in our various other businesses that we have on the entertainment front, obviously our clear intention is to exit them. Not only that, also our intention is to exit all the other non-core investments that we've made as a proprietary type investment book. That also in the next 18 months our intention is to exit those. Hopefully in that we should be able to raise much more than 3,000 to 4,000 crores in terms of cash, and that will happen over a period of time, over the next 12 to 18 months. But clear intention is that we want to be a financial services player without any non-core investments in our portfolio.
Okay, well,
I think just to add something, in the Indian Commodities Exchange, obviously our intention is to grow that, because one of the areas of focus for us for next year will be our Commodities Exchange business, our asset reconstruction business, and obviously our broking and distribution, which has to also grow.
Okay, what are you doing in the asset reconstruction business? How big is it? And what is the modus of growing it? Will you tie up, get more capital?
Yes, see, on our asset reconstruction business, we own 49% as per regulations. We have a couple of banks as partners, as well as some foreign investors. Today our AUM is 1,500 crores. We focus mainly on SME and retail. I think that's a big difference comparing us to others, where most of our other competitors are in the corporate side, corporate loan book, while our book is mainly SME and retail. So our churn in the book is very fast. We can resolve cases, nearly 30 to 40% of the cases are resolved. And our intention is to grow in that segment. One of the plans obviously is to raise some equity in that business, so we want to do a rights issue in the next 6 months, maximum 6 months period, and then continue growing the business. AUM obviously has to double in this next financial year.
Okay. You did mention that you're going to raise 3,000 to 4,000 crores by selling your non-core investments. Would this include the sale of your radio business?
That's correct, because and this is excluding separate to our insurance business. If you look at our general insurance business, obviously we'll bring in a partner there. We should be able to raise much more money there. But I'm just purely talking about our non-core investments.
So how much could you bring in via the partner in the general insurance business? And since you're already in talks, can you give us a sense of what the growth in the general insurance business could look like in the quarters to come?
See, on the general insurance business, first of all, we have tried to realign our portfolio a bit. So that's why this year we've grown at about 5%, but in the next few quarters we'll show again 12 to 15% growth rates. Primarily, we want to reduce our focus on the motor side and grow the non-motor business. Health is a specific focus area for us. So that is one realignment we are in the process of doing. But the business is growing and the ROEs are well above 10 to 15%, and we expect this year we should close at about 15% ROE. So that's the key focus. In terms of bringing in value for that business, if you look at last few transactions that have happened, obviously they've been happening at a fairly substantial value, nearly 3 to 4 times book. So if you look at even on those terms, and some transactions happen even at 7 times book. So I think there's a value range between 4 times book to 7 times book. But if you look at our net worth, it's about 1,000 crores. So you can work out what the value could be.
Okay, what's the plan for the NBFC business? You seem to be most excited about that. You spoke about commercial finance as well as housing finance. What are you all planning? And you know, when these payment banks and other digital, even for that matter, the Amazons of the world, are you tying up with any of these digital spaces?
Correct. So first of all, if you look at our NBFC business, commercial finance, we clearly focus on SME sector. So we are one of the large players in the SME sector, and we'll continue to focus on that because that is our core strength. If you look at on the housing finance and Reliance Housing Finance, our separate subsidiary, there we focus on the housing, retail housing finance and the affordable housing, and that's where our real growth is happening.
What's the total AUM for both put together?
Housing, put together, total AUM is about 19,000 crores. But if you look at separately, in the housing finance, it's about 6,500 crores, which we'll close this year. We aim to close at about well above 10,000 crores AUM. Okay. So our growth is obviously happening at a substantial rate on that front. And
yeah, you were speaking about a commercial lending as well. Are there any plans to tie up with digitized partners? And will much of this 4,000 odd crores that you're earning go into these businesses?
Yes, so if you look at from the capital raise, obviously part of it will go towards housing finance. To be able to grow the housing finance, and our clear direction from our chairman also is that we should grow the book to about 50,000 crores in the next few years. So that business will require some capital, and therefore we will have to invest in that business. In terms of digital, obviously that's another key focus area for all our businesses, and be it on our asset management, on our insurance businesses, as well as lending. Our intention is that at least 20 to 30% of business should come through the digital platform. We have been tying up with various digital players, and in the past we've tied up with Paytm for certain transactions for insurance businesses. On the because on the commercial finance side, as it's mainly SME focused, we obviously are now looking at how do we tie up with an SME platform player. So that is one area of focus for us.
Okay, that's interesting.
But otherwise, on the retail side, we've tied up with various players. Yeah.
Okay, Sam, we'll leave that for another day, that discussion that is. Thanks so much for giving us all the details and all the best for the quarters to come. That's the word coming in from Reliance Capital. It's been